Well, rental prices in Canada have gone up again, and it almost seems like they're going completely out of control. A recent rentals.ca report came out and it showed that rental rates are again on the rise, and we're continuing to eclipse records across the country. And if you're in the west coast of Canada in Vancouver, you're at the top of that list. So you've got to start asking yourself the question, when is the top and what is the solution? As a landlord, you could be looking at this and saying, well, that's a great thing, but in many cases, it actually may not be. Here's what I mean by that. Let's get into the video. Hey guys, it's Alex McFadden here, mortgage broker, owner of Flow Mortgage Co., and we like to help our families create wealth. The focus of this real estate channel is to help you understand what's happening in the mortgage world and things that impact your finances. So today our conversation is all about specifically what's happening in the rental market across the country. As I referenced previously, there are consistent high numbers of rental rates all across the country from west to east, and it doesn't seem like there's any easing going on. So we're going to discuss specifically why this could be happening, some potential outcomes, what actually you can do about this situation, and of course, what we think could be the solution towards the end of the actual video. Let's get right into it, shall we? First and foremost, the number one thing that could be impacting actual rental rates has a lot to do with what's impacting the entire country, and it's actual mortgage interest rates, which have been rising steadily since 2022, in part due to inflation, well, in most parts due to inflation, and the Bank of Canada's mandate to try and get it under control. Unless you've been hiding under a rock, you know that the Bank of Canada has increased interest rates over 4% since 2022, which has had a direct impact on the housing market. Now, although we did see the housing market slow down and we did see purchase prices come down in 2022, we've seen that rebound almost completely in 2023 to see that come right back up, even though rates have gone up. And this has had a direct correlation impact into the rental market for, well, maybe obvious, but maybe not obvious reasons, as landlords are paying more for their actual mortgages, and many of them are variable rate mortgages. They're passing these costs on to consumers. That is one of the key reasons that we're seeing rental rates raise all across the country when it comes to mortgage rates. Ultimately, a landlord has a decision to make. Do I either increase rental rates, or do I lose the property or pay thousands of dollars of cash flow every single month? Now, whether you think it's right or wrong, this is essentially how it operates. And with single family rental owners, mom and pop, so to speak, landlords across the country owning these properties, it's very difficult for most of them to continue being on a negative end of cash flow, especially when it could be thousands of dollars every single month. The other consideration is that because of these higher interest rates, many of these landlords are starting to sell off their properties, which is potentially displacing tenants. As many of the home buyers are actually moving into the residences, that means that the existing tenants get displaced and have to move elsewhere or out to a different type of property, generally speaking at a higher rent, especially if they've been living in that property for a year or more. Now, this isn't necessarily a rent eviction. This is just simply a point where the existing landlord is saying it makes no sense to actually continue to keep this property, and they're letting it go for obvious reasons, the cost being too high. Now, another consideration is actually immigration. Now, this has been vilified by many who don't understand the impact of immigration on our country, but it's actually required to continue to keep wages low. Otherwise, there's not enough people in the labor force to actually fill the number of jobs that we have available. However, it's having an adverse effect on the actual housing market as a whole, as most people who come to the country don't actually buy a home in the first 1 or 2 years, and only do so later on when they become residents or permanent residents, or have saved up the money and the job to actually purchase a property. And what this has meant is that there's more people than ever flooding the rental market, which has increased demand without increasing the actual supply of these different types of rental properties for immigration. Moving forward, the demand, we're seeing more millennials than ever, which will be the largest base of population in the country to buy homes over the course of the next 3 to 6 years. There are literally millions of people that are just waiting to get out of their parents' basement suites and looking for different opportunities to buy real estate. While many of these people are currently staying home, there is a lot of demand on purchasing housing. And as we can recall earlier, when these people are purchasing properties, typically they're buying entry-level condos or entry-level homes, which normally are currently owned by a single-family landlord, therefore displacing even more and more of those tenants into other different types of properties. Again, increasing the actual demand without increasing the supply. Rental restrictions are the next big topic. And here's what we mean by rental restrictions. There is a limit in many provinces, British Columbia in particular, and Ontario, on the percentage of rental income that can be increased annually year over year. In BC, there was a period of time for 2 years where there were no ability for landlords to actually increase rent, which means that it was at a standstill or a freeze for a couple of years, even though the actual property values were increasing and as mortgage rates were essentially going up. During the year 2023, landlords were eventually able to increase their rental rates by only roughly under 2%. If you think about that, there has been a 3-year period where the cost of living has gone up by anywhere between 15 to 20% in all other areas, but they've only actually been able to increase the rental rates by around 1.9 to 2%. This has caused, again, another bottleneck for these landlords who are holding these properties. This has led, unfortunately, to more landlords deciding to sell these properties, evict tenants, do renovations, or look for other opportunities to increase their actual cash flow through Airbnb or other considerations here. Now, what is the solution when it comes to rental rate increases? I don't exactly know the actual answer, but it is clear that what's happening right now isn't working, and there probably needs to be something in the middle between the tenancy laws and, of course, the landlord's rights in regards to how much rental rates can be increased. Otherwise, you're going to continue to see this turnover of these properties where landlords can't continue to hold it if rates continue to stay high, and tenants are displaced because the landlords have to continue to sell these actual properties. One of the possible solutions to this whole issue could be purpose-built rentals, but I mean, historically speaking, these are typically 2, 4, 6, 8 unit properties and not large unit buildings, especially when it comes to surrounding the major cities. In addition, there haven't been very many incentives for builders to actually develop these properties. It's only been recently in the last 5 years where we've seen large corporations start to come in and build large 100+ unit complexes. But here's the catch. Most of these purpose rental buildings are actually high-end and high-end cost, and they don't help out that lower or entry point renter in those buildings because, quite simply, it's too expensive for them to build to put someone in these houses. And these different types of property managers who run these buildings, generally speaking, do not forget to increase rent. Plus, with quality property managers in place, the buildings are maintained and there's a high cost associated with maintaining these particular properties. So if purpose-built rentals aren't the problem, what is a solution? Well, we've seen many different types of ideas come down from the federal government to different cities to provincial cities, but the reality is it has to be densification. Vancouver itself is considering bringing in more 2, 3, and 4 dwelling unit allowances on different types of lands, and we're starting to see more people continue and consider to build in places like BC and Alberta, these types of properties. But this isn't an instant fix, and it won't fix the major problem for quite some time. So while we hope that we'll see more densification in many cities, it looks like we will be dealing with a situation where rental rates aren't under control for a long time. This continues to beg the question for potential landlords: does it make sense to buy real estate as an investment? And the answer to that question is really depends on your situation, where you're buying, and what are the different tenancy laws in those different cities. As a renter, you might question yourself, how can I ever move, or where can I ever go? And the reality to that question is there's no easy answer. Ultimately, at the end of the day, it will really come up to you and I to be very clear in our voting and who we put in charge to ensure that we have people who are focused on densification, who are allowing rentals, and are incentivizing the growth of our country through housing instead of restricting it, to be able to help and make sure that people have places to live that are safe, that there is opportunities for housing and opportunities for landlords. I'm Alex McFadden. If you liked what you have listened here today and watched, make sure to go ahead and like this channel, subscribe. If you agree or disagree, make sure to leave a comment below.